If you're a company that can bring me multiple ways to pay, now I'm getting more acceptance. If you're a company that has great security and fraud protection, I've got less concerns. And in some companies, and we're a case, and there's several others out there, we also can bring consumers to your company as well, because we actually have customers that use our payment methods, and we can bring them to the merchant. So the customer, the payment player that can help a merchant do more, help them sell more, that is strategic, that is critical, versus just being a cost of processing in the background. And that's a pretty important shift that we're seeing.
Hello. At the end of March, BFT SPAC officially merged with Paysafe and began trading under the new ticker symbol PSFE. Since the merger, the stock has been trading flat and within a $13 to $14 range. This is one of my highest conviction long-term stocks to hold, and at these current prices, for me, the risk is so low that it doesn't make any sense for me not to continuously dollar cost average in as my main fintech play within my freedom portfolio. With the first Paysafe earnings call coming on next Tuesday, the 11th of May, this may be a catalyst to jumpstart the stock to the upside. What does Bill MVP Foley see in Paysafe, and what can we expect moving forward from CEO Philip Mchugh? Stick around for this and more. Keep it simple. For those of you new to the channel, I am the Simple Trader, and I bring to you WPG stocks, yes, explosive exponential potential growth stocks that I'm looking to buy or already have sitting in my freedom portfolio. I am not a financial advisor, so please understand this is all for entertainment only. Full disclosure, I built a position back when the stock was still a SPAC and trading under BFT, and now that the merger has been completed, I am looking to consistently add to and dollar cost average into PSFE while it is still under $25. If you need a deep drill into the company and what they do, please check out my previous videos on BFT. No more plugging, let's start drilling. The only news apart from all the solid fundamentals we already know pre-merger is that on April 29th, Paysafe signed a multi-year agreement with Amazon Web Services to become a fully cloud-based payments provider. Through this, Paysafe will migrate its broad portfolio of mission-critical workloads, including eCash solutions, Paysafe Card and Paysafe Cash, and its digital wallets, Skrill and NetTeller. This integration is huge, as it shows the instant development of Paysafe under Bill MVP Foley's leadership. Moving to cloud-based integration is for me the future, and being a multifaceted fintech company, this is big. The real-time transactional processing powered by Amazon Web Services will allow merchants to offer a frictionless customer experience at the point of sale. Imagine saving up to 10 seconds of each transaction and scaling that up. The results will be huge, and I see this as the future where Paysafe could look to capitalize versus the competition.
We've got great technology that's easy to integrate with, so that's less headache. We are global, so for a merchant that wants to go around globally, we are their partner to support them there. But most importantly, we have a unique combination of products for consumers and for businesses. I can help you take payments with fraud and security and peace of mind, but equally I have alternate payment methods like my digital wallet and my eCash that can bring consumers and other ways to pay and sell their products. And that combination has always helped our core customers grow and do more, and something we're really, really proud of.
On April the 1st, Paysafe lodged their Form 20F with the SEC, which is basically their annual and transitional report for a shell company merger completion. There's not much in this that we don't already know, but I do want you to focus on one particular area that they highlight again that will provide high growth potential in the coming 3 years, and that is the US iGaming market. This is also where I believe Bill Foley will play a critical role moving forwards.
Well, we have a real opportunity with Paysafe in terms of the launching of North American gaming and being right at the heart of it. And we're already working hard on a couple of different partnerships and acquisitions that will really establish as the preeminent iGaming leader in North America. So I'm excited about Paysafe. It's a really a great company.
The trajectory of this TAM, target addressable market, is expanding rapidly and expected to grow volumes from 3.4 billion in 2019 to 24 billion dollars in 2025, a 39% CAGR according to some industry analysts. The estimates from Paysafe themselves though are that if the US market reaches activity levels comparable to the UK, then volumes in the US could reach up to $47 billion by 2025, meaning a possible CAGR of 55%. They are currently operating and serve over 34 operators across 14 states, including DraftKings and various state lotteries. As iGaming expands, and especially companies like DraftKings grow, then Paysafe grows. It's a beautiful model and one that has seen the likes of Visa and MasterCard grow into the top 20 companies in the world in terms of market cap. In my opinion, and my position on this has never changed from when the merger with BFT was announced, is that Paysafe is really a play-safe investment for the long term. Recently, a few analysts have come out and initiated strong coverage on the stock. RBC, Royal Bank of Canada Capital, has given an outperform rating with a target price of $19. Wolf Research and Compass Point both started coverage and exactly echoed RBC's outperform rating and their $19 target price. Steve Grasso recently showed us continued support on the stock.
Steve Grasso.
Paysafe, this is a name that is exposed to Twitch, to Fortnite, and yes, Tim's DraftKings as well. This is a name that's exposed to crypto. So this is the way to play online gaming, grossly undervalued. PSFE, grossly undervalued.
What does Bill Foley see in Paysafe that made him put his reputation and capital on the line?
But the thing that was different about our transaction is that we brought capital to the table. On my companies that I'm affiliated with actually invested roughly $1 billion in the pipe and in forward purchase agreements. So Paysafe was always a really protected asset. Besides the fact it's a great asset, and it has traded up from our initial announcement of our proposed transaction with Paysafe. We basically searched and went through about 300 different companies, identified roughly 10 to 15 that we were really interested in, and Paysafe was right at the top of the list. Paysafe and the Light were my top two choices, but it was really a detailed search to find these companies, and we want companies that had some size, because the Trez main SPACs are both about $1.5 billion in size in terms of capital that they could deploy, and we're thrilled with both companies, frankly. And Paysafe in particular is ubiquitous. It's just everywhere in terms of the gaming world and digital wallets, eCash solutions.
In Phil Mchugh, I see a strong CEO that I believe has the passion and focus to drive Paysafe to the next level. And what does Paysafe have in store moving forwards?
Yeah, I think Paysafe's a company that's been around for 20 years. We've got a really deep and wide group of clients that we've been serving for many years. We have digital wallets and eCash where we're digitizing payments. We're specialized and we're really good at deep verticals like iGaming and digital goods and FinTech services. So just the secular trends are real. The profit and the margins are real. I think our partnership with Bill is also an incredibly huge asset. You know, Bill's track record and growth, plus the business that we have. So it really stands out as a specialized payment company, our ownership and our profile. So I do think it's very good quality. We've got good plans and clear plans of where we see more opportunity. So I think those aspects have really helped, lead to a good initial story, and we're really excited about the next chapter. Look, I think we're in a really good position. Mission one is we're a global leader in iGaming, and we're really well positioned to win in the fast-growing US iGaming space. So that's a big part for us. Two, like you said, with Microsoft and some other great clients, we're winning in streaming and online gaming and FinTech services. We bring risk management, we bring wallets, we bring kind of global processing. And that combination, we're going to continue to win in those verticals. Partnering with Bill, we're also going to drive some operating leverage and scale, which is a big piece. And being public really positions ourselves. We're deleveraged, we've got a strong share price, we've got some clear views on where some M&A opportunities exist, and that's kind of the fourth pillar of growth where we see where we're really going to attack and see if we can find some great opportunities to expand Paysafe's offering even more.
To summarize, with the first quarter 2021 earnings call coming next week, we will finally get a sense of what Paysafe is looking like since coming public and under the new leadership with Bill Foley integrated as chairman. We have to give Paysafe time to develop and grow. I believe they will grow into a huge company in a few years' time if they continue their growth and deliver on their expansion plans. With the Amazon Web Services deal and the move into digital transformation and cloud-based services, I see Paysafe dominating various sectors. And remember, they even partnered with Coinbase for cryptocurrency.
But we've got to talk about your new point. You have this net teller, which is skills, and now you've got a partnership with Coinbase. You've got the world, Bill. It's the world.
If you are interested in WPG stocks that I have in my Freedom portfolio, please check out my other videos and just consider subscribing to my channel so you get the information first. I am the Simple Trader. I try to keep this simple and will simply see you next time.